Good morning. It is Tuesday, October 29th, 2024. It's about 11 a.m. on the East Coast. And this is Robert Sin at CEO Technician on X, at Goldfinger on CEO.ca. And this is Goldfinger Capital. This is our weekly video here on Goldfinger Capital. And as you can see, I got fewer bullet points than usual this week, but maybe there's a little more meat on each of these bullet points. We'll see how long it takes to get through this, but I appreciate you tuning in. And as always, if you like this content, if you appreciate the videos that I generate, please hit the like and subscribe button. We're just getting to 3,000 subscribers here on Goldfinger Capital. It's not easy to build a YouTube following organically, and that's what I've managed to do the last couple of years, and I appreciate your support and viewership. So, we're a week out from the U.S. election, actually exactly 1 week away. I've got no election forecasts or any commentary, although I'll just say it's very noisy out there. I don't really like tuning into my social media platforms because a lot of it is about the election. So I just try to keep to a tight little list of follows that I know are going to talk about financial matters or maybe sports. But it's definitely very noisy out there. I think that it'll be good to get past the election from a market standpoint. I feel like the market's been a little noisy the last couple of weeks. I feel like some of the positioning, betting on a specific outcome, is a little overdone. I really don't think either president is very different in terms of fiscal policy, and obviously the monetary policy is Fed driven. But we'll see. I'd be happy, when it's over, regardless of the result. More all-time highs in gold this morning. Look at that, 27.82. 27.82. Can you believe that? What a move this has been. And, this is, I posted this chart on X last night, and this is the silver daily chart. The CCI, the RSI, these are good indicators of the momentum and strength of a trend. And I love how the CCI is making higher highs in the context of higher highs in price, right? And, the old version of silver might have broken out above 33, but then it would have been a failed breakout. It would have crashed back down to 30 or 29 in a few days. Not this silver bull market. This is holding above the breakout level and acting very bullish. So it's a bull market, folks. It's a precious metals bull market, and I think that we just have to establish that and act accordingly. And, the fundamental rationale for the bull market, I've just made a few points here. Big government and the fiscal, it's excess. The deficits are just absolutely extraordinary. The amount of money the Treasury has to raise to finance the government, it's unfathomable, really. I think it's like $1.6 billion, between now and the end of Q1 2025. That's a lot of Treasury debt that has to get sold to the investment world. And the Fed has to counter this by helping the Treasury to finance itself, by easing monetary policy, by lowering interest rates. And then, AI is bringing a unknowable, big impact to the economy that's most likely going to be deflationary. And it's going to lead to higher levels of unemployment. So this must be countered with, UBI, like a basic income for all citizens, and looser monetary policy. That's the only choice, really. And all of this is very bullish for sound money, for precious metals, the tried and true store of value, with no counterparty risk. And the fact that we have like Tether, the stable coin, is stockpiling 48.3 tons of gold. That has a market value of a little over $3.5 billion today. Well, that's a bid that I don't think anybody saw coming into the gold market a couple of years ago. And then we have all the de-dollarization bids into gold from the Saudis, from China, et cetera, et cetera. This bull market has legs because these macroeconomic forces are only getting stronger, right? These aren't transitory. These are very powerful structural forces that are propelling precious metals higher and making this bull market scale higher heights. And demographics, so we have AI, this unknowable force, exactly how it's going to play out and how it's going to change the world, but it's going to for sure. And then demographics, just the aging populations of the West. Canada, the birth-death ratio is now 1-to-1. And people the fertility rates continue to drop in the US, in Canada, in Western Europe, right? So these trends continue, and it doesn't look like they're stopping anytime soon. The economy, it's like we had the good jobs number last month. The non-farm payrolls beat expectations. The data from the US government is, I think it's fraught with error, and I don't know how much I trust it. We're seeing retailers like Starbucks. Now, people could say that's a Starbucks issue because people aren't consuming sugar as much anymore. That could be true for sure, but Starbucks is a very big corporation that samples a very wide swath of the global economy, especially in the US. And the fact that their sales, like their revenues were down 7% last quarter, and they pulled their guidance, I think that's not a great sign for the consumer and the strength of the economy. And then we get this Beige Book report that says the economic activity was little changed. And when you read into it, certain sectors of the U.S. actually are moving downward, right? So they're contracting in terms of the economic activity. Consumer spending fell modestly in Philadelphia, right? It's a mixed bag. There's certain areas of the U.S. that picked up. There's certain areas that dropped. It's definitely a mixed bag. But I don't know. It just doesn't, like I read this Beige Book and I see the Starbucks quarter and I'm like, this is not a really strong economy like the last jobs report made it out to be, and what some of these economists and bankers are telling us that the U.S. economy is so great. And then the oil price. So, I think, simply put, oil is not trading well. It's selling off as there's clearly war in the Middle East. Now, we can have our opinions on what's really happening over there and if this is theater or not. I think to some extent it is, but, you would think that some of the events that have taken place in the Middle East in the last couple of months would be very bullish for oil, and the exact opposite has happened. Okay, the exact opposite has happened. Oil is in a downtrend. So really, let's just take this as simply as possible and just say, well, oil is not telling us that the economy is robust. It's actually telling us the opposite. Okay, this pronounced weakness in the oil price against a backdrop that should otherwise be positive for oil. I I don't know. I don't know. I feel like some of the government data, especially the non-farm payrolls reports, are not accurate, to say it politely. So, but we'll see. They're always revised lower in subsequent months. We'll have to see what those come in at this Friday. The consensus is for plus 123,000, which is a pretty low consensus number, but the unemployment rate is expected to stay steady at 4.1%. But let's see what they say about the revisions. Last month they came in higher. So the jobs numbers from August and September were revised upward, but it seems like it's usually revised lower, not higher. But we'll see, and we'll also have to see if maybe there's some window dressing of these numbers a few days out from the election. I don't know. So anyway, yeah, moving on. Yeah, and as far as the stock market goes, I got nothing. I feel like we got to get past the election. We got to get some more data. But obviously, seasonality the last 2 months of the year has a tendency to be positive for stocks, especially as we get closer to Thanksgiving. I think the fact that the S&P has just gone sideways for the last couple of weeks is probably a bullish thing. But why are stocks going higher when the Beige Book says that economic activity is basically sideways, stagnant? Beats me, right? I don't know. But if I just put on my technician hat, I don't know. It's not a short. It's not a short yet. That's for sure. And obviously, falling oil prices help a big part of the economy with lower costs. Consumer sentiment is doing really well, and I think that has a lot to do with just gasoline prices dropping and inflation stabilizing. I mean, it's pretty clear that inflation is now about 2%. People aren't seeing their rents go up every 6 months, now, and gasoline prices are basically on the lows, right? So usually that is good for consumer spending. It's strange that Starbucks, reports a 7% drop in sales, for the quarter. So it's a mixed bag in this economy, and I think it's really hard to gauge what really is going on. Moving on, so CYBN. This is one I have talked about several times. I am long it. I'm still in this trade. It's a tricky stock. It loves to shake out. It's volatile. Like just last week, it got up above 11.50 and then proceeded to drop all the way back down to almost $10. So 10 to 15% moves are just like a daily occurrence, in this thing. So you have to be prepared for the volatility if you're trading this. And also you can see from early September, the stock rose over 50% in just a month, right? So it's volatile and it can really move. I believe that this is going to have a lot of news flow in the next month from the commencement of the CYB003 phase 3 trial, which is a big catalyst for the company. Company has over $100 million in cash, so they do not need to go to the market with their hat in hand in the near future. I'm sure that's a possibility next year, but with over $100 million, I would not expect them to finance here in the next couple of months unless they just got an incredible offer from a large investor or a big institution or something. And then there's CYB004 for anxiety phase 2 results. So top line, readout is due here in the next couple of months. So I think those are two big catalysts for CYBN. And with this move in Bright Minds Biosciences drug on the NASDAQ and the buyout of Longboard, there's more focus on brain health again. So I feel like this was a major capitulation bottom for CYBN and for the medical psychedelic space more broadly here in 2024, and maybe onward and upward. So I am still holding CYBN just from a technical standpoint. The fact that it's holding this support level is a positive in my estimation. Oh, investor psychology and junior mining. So this is the real meat of this video. Yeah, so, co.ca obviously is a place that I know very well. I've been a member since the beginning of time, since early 2015 when the site was created. I've seen a lot of things happen over the years. I've seen a lot of big rises like Novo Resources in 2017 and Garibaldi Resources in 2017, 2018. I've seen both those stocks crash back down to earth in subsequent years. I've seen Great Bear, 2018, 2019, obviously bought out at the end of 2021. I've seen Hercules Metals last year in that incredible October, November move in that stock and the Barrick investment and what that helped to propel that stock to $1.60 and a $400 million market cap on one drill hole, right? And those stories, Novo, whatever, 60 cents to $7, or Garibaldi, 25 cents to $5, or Hercules, 25 cents to $1.60, like those are the reasons why anybody would want to play in the junior mining sector. Without those 5x and 10x and 20x moves, this sector is not a good proposition for most investors, right? Like, you need those big wins. You need those drill holes that change the game and open up a lot of blue sky to have this be profitable and to be fun and be exciting, quite frankly. And there's nothing like the excitement of a new discovery. I love it, right? I live for it, quite frankly. But, there's a big tendency among many traders and investors, speculators in the sector, to chase the shiny objects and to build up expectations that are highly unrealistic. Now, whether that is authentic, that they actually really think that things are so wonderful and it's going to be $1 billion buyout, and I'm making up that number, and I'm not even attaching it to a company. I'm just making a general statement there, or they're just using those kind of words to hype it and get other people to chase into it so they can sell. That's up for you to, ponder, right? But I know some people do get very attached to some of these stories and become very obsessed. I've done it, frankly. It's easy to, especially when you have a big investment in it. You want to see it do well. But I think it's very dangerous, and I've learned over the years that keep your expectations more modest, keep your feet on the ground, and don't chase the shiny objects. No FOMO. It's one thing to read a company news, a piece of news from a company, and say, hold on, this is really interesting. Then to generate an investment thesis and calculate, okay, how big of a position am I going to take here? How much am I willing to risk if the subsequent news flow doesn't measure up to market expectations? How much am I willing to risk? And then stick to the plan. But to just blindly buy into something without a real investment thesis, without a good understanding of what needs to happen to bring this company to the next valuation, level, then, frankly, it's reckless. It's reckless, and it's not profitable over the long run. Like, that kind of strategy of just buying on the fear of missing out because other people are possibly making money today. I want to be a part of it too. That's a losing strategy. That's ineffective in the junior mining sector and just in financial markets, period, right? Like chasing the shining objects, whether it's crypto, whether it's biotech, tech, whatever, it's a losing proposition. And I wrote this in 2019, so more than 5 years ago, and I'm actually going to republish this on my blog, Goldfinger Capital, later today. But this really lays out the right mindset for a speculator in the junior mining sector. I mean, I reread this for the first time in years this morning, and I got it right. I mean, this is a timeless post. I am perfectly content with doing nothing. So until you are unattached to the outcomes and just watching, then you're not going to be a great speculator. And, you know, to allow your emotional state or what you are seeking, right? Like what you're seeking, like what you're yearning for, to affect your analysis of a stock or your expectations for what should happen, you know, with a stock is also just silly, foolish, and risk-taking, like risk tolerance. Like just don't risk more than you can afford to lose. These stocks are crazy. They can drop 25, 30% in a day in 30 minutes. So why are you going to buy 1 million shares if you can't afford to, you know, withstand a 30 or 40% drop in a short period of time, right? And also, you know, try to be objective, right? So that means take different points of views and consider it for yourself based upon the facts, the actual facts that we do know in a sector where there's so much open to interpretation, there's so much in flux in terms of drill results and what might the ore body, you know, look like in terms of scale and average grade, and you know, where's the expansion potential? Can they make a new discovery? How much money do they need? You know, there's so much in flux, right? There's so much open to interpretation. But analyze the situation as objectively as you can based upon the actual facts that we know. And just be open to being wrong and shifting your view, right? Like don't stay stuck. And I'm not going to go through all the bullet points. I'll publish this on Goldfinger Capital on Substack. Please read it for yourself and think about it for yourself. Some of my best content, right? I have a lot of content I've generated over the years, and I will be publishing a lot of it on Substack over the coming weeks. And just think about the market as an expectations game. So when expectations are low among investors, the potential is higher. The potential for the company to generate an upside surprise is higher. When the expectations are really high, there's more risk of a disappointment. Even if the news is good, it doesn't mean it's good enough for the stock price to go even higher, right? You have to really understand that. It's not a conspiracy. It's just how it is. The market is an expectations game. How many times do you hear about a company that reported earnings and the earnings beat estimates and then the stock fell, right? It happens a lot because the expectations were even higher than the estimates were, right? The same thing happens with drill results in junior mining. So tax law silly season is approaching. This year, it feels different this year. I don't know. I can't put my finger on it, but maybe it's because we're in a bull market, even though many junior mining stocks haven't got the memo that we're in a bull market. But it just feels different this year. But I still think there will be some tremendous opportunities in November. opportunities to buy into, and this is literally the best trade of the year. If you don't do anything all year in the junior mining sector, just adding exposure at the end of November, at the end of the year, and then holding it for a few months into the following year is the best trade of the year, right? It works almost all the time, and you can't say that for many strategies, but there will be some opportunities coming up here over the next, let's say, 6 weeks. And you really want, and I will make a post about this probably in a month with some of my picks and some of my thoughts on tax law season. But you really want to pick companies that have good projects, good management team, and for whatever reason, 2024 didn't work out according to plan for them. But that does not mean all is lost. And turning the page to a new year can give a fresh start, right? So that's kind of the approach. That's the way you want to think about these. You don't want to get into companies that have a big, residue, a big hangover. It's just the share count is just way too bloated, or there's just too many bag holders that it's going to be so difficult to get any traction in the future. But some catalyst, like especially if it's down in 2024, but there's a catalyst in Q1, a potentially really big catalyst for the company, that's a really nice setup. But then talk to management and gauge what the quality of that catalyst actually is, and do they have a chance to beat expectations when they announce that catalyst, right? So you want to be thinking ahead several months to early 2025 when you consider a potential tax loss candidate here in the next 6 weeks. Bull market adjustment. So this is something I made a chat comment on co.ca and talking to some friends about, is this really a bull market? Well, we can establish that it's a gold bull market. I mean, 2775, it's an all-time high. Yes, it's a bull market. But is it a bull market in junior mining? It's not clear that it is yet, but the signs are there. The early signs are there that the worm is beginning to turn, right? The TSX Venture Composite Weekly just beginning to edge up out of this head and shoulders bottom, this multi-year head and shoulders bottom. It's just beginning to move up. But it's certainly not like every stock is going up 10 or 20% a day. It's not that kind of a bull market, right? I also really think that, cost of capital is still pretty high out there across the economy. I mean, just look at mortgage interest rates, right? Like the 30-year fixed is back above 7%. So when people are paying like 7.5% on their mortgages, like they're hurting, like they're feeling that, like they're feeling that pressure. And the Fed funds rate is still at 5%. I know the yield curve has shifted down and priced in a bunch of Fed rate cuts, but still 5% on the Fed funds rate is holding up the front end of the curve and keeping the cost of capital pretty high. So the Fed posture is still pushing down on the economy and weighing down on inflation and consumer spending, quite frankly. So, and just the junior mining sector is a risk-on sector. It's like when money gets cheap, it flows into the riskiest stuff like junior mining. So we're just not there yet, but we're starting to see, the seeds are sprouting here. The seeds are sprouting. And gold keeps going up, silver keeps going up. This is absolutely a bull market. And we haven't even talked about copper and the structural bull market that's, possibly going to propel copper higher for the next decade. Is really powerful. So I believe it is a bull market. It's just very early in it, and many market participants are not convinced, right? So they need to be convinced. The only way to convince them is higher prices. The only way sentiment, follows price only all the time, and it will never be any different. So just junior mining chart review. And I just want to talk about Hercules Metals because this one is obviously one I've talked about a lot over the last year. Was my biggest winner of 2023, buying on the morning of October 10th, when they put out the results for hold 2305, and then selling it in November for a big gain. And then, of course, I got back in, and I still hold a pretty sizable position in Hercules here, and I'm not giving up, even though this has been a tough year for the stock, the share price, and the drill program has definitely gone slower than we expected, right? That's weighed on the share price. If you understand the way this works, it's early stage exploration, and to drill out a porphyry and figure it out, especially with the amount of faulting and shifting that's happened in this area of Idaho over the last 200 million years, it takes time. It takes time, and this company started with humble roots in 2022. Look at this run. I don't think many people appreciate just how terrific of a run this was over 1 year. Okay, it's unheard of to go from less than 5 cents a share to $1.62 a share in 1 year. It's absolutely unheard of, right? And this also did not have a small share count, right? When it got to its peak in November 2023, it was a $420 million market cap on the TSX venture, right? So we're giving back. We're sort of paying for some of that, euphoria that Hercules had there in Q4 2023. But if you look at social media comments and some of the commentary, and just the fact the company doesn't do a whole lot of marketing, doesn't do a whole lot of talking, quite frankly, they're just focused on drilling and the rocks. The sentiment is kind of on the other side of the pendulum from where it was last year at this time. It really is. So for me, that means opportunity, right? But not without risk. Like, there is risk here. If the drill results do not stack up, the stock could definitely go lower, right? So you have to be prepared for that. You have to understand that risk. But what if they're able to follow up with a hold better than 2305, right? Which they're trying really hard to do. A lot of assays pending. Who knows, what could come. Then all of a sudden, with low expectations, the bar is that much lower for them to jump over, and the share price could go higher, right? And all of these discovery stories, like Patriot Battery Metals was like the darling in 2022. If Hercules was the darling of the venture in 2023, Patriot Battery Metals, was the darling in 2022. Well, it's having its hangover. All of these, it's very hard for these juniors with new discoveries that have just incredible runs to not drop at least 50% from their highs at some point in the life of the stock. And in some cases, it's going to be 70% or even 80% or even freaking 90%, right? And you just don't know. There's no magic formula. You can't take AI and tell me how this stock is going to trade. Tell me if I should buy it or not, right? That's for you to decide. And it's about your risk tolerance and position sizing, right? Rupert was a great discovery story in 2020. Okay, I mean, this was the stock of the year in 2020, and it actually managed to hold up near these highs for a couple of years. But even this one dropped over 50% from its 2022 high to its 2023 low. It's just beginning to put in a base and move back up here again. But it's doing this, it's just edging ever so slightly higher with gold at 27.75, right? I'm sure there's a lot of shareholders here who thought, well, when they bought this in 2022 at $4 a share, if you told them gold will be up $1,000 in the next 2 years, they'd be like, I'm going to make 500% on my buy here in Rupert at $4 a share. No, they'd be wrong. It's gone sideways, right? The market's tough, guys. It's tough. It's tough. It's not that simple. There's so many variables, there's so many factors that are moving prices around across markets. So I think I made my point there. And then just junior mining chart review to wrap up. American Eagle Gold did a webinar with the management team there. It was very well received last week. And there's definitely a burst of optimism here about the copper enriched North Zone. Charts looking pretty good, although I will give a small admonishment. Look to the left in the chart. There is key resistance at 75 cents. So we'll have to see if it can break above that when they put out the next set of drill results. Blackrock silver. I mean, this is just simply an American silver play, right? High-grade silver in Tonopah. Great place to have a silver mine or a future mine. And it's just consolidating in a bull flag pattern, this really big move it's had from August through October. It looks bullish to me. Dolly Varden, very similar chart. Also another top tier silver junior consolidating the big move it's had August through September. Founders Metals, I mean, this is just a running bull market, just an incredible run in Founders. Fantastic story. B2 Gold has made an investment here. They're already up a few $1 million on their investment that was just announced a few weeks ago. I'll be speaking to the CEO, Colin Paget, on X Spaces, 1 p.m. Eastern on Thursday, Halloween, October 31st. Libero Copper, they're drilling in Colombia, finally. And this chart is on the upswing. I think this one put in a major capitulation bottom earlier in the year. Probably not a tax loss candidate, you know, even though it's down from its highs made earlier in the year. They are drilling, and they're drilling what looks to be a beautiful hole into a big porphyry deposit. The results should look pretty good, and they've got their mojo back. Company is well funded, and it has a nice shareholder base, including Frank Zustra, who adds a lot of credibility and validation to the company. And then finally, Sitka. So this one, I mean, VG out the wazoo, incredible hole they announced last week at Rose Gobel in the Yukon. Something like 600 meters of 1+ grams per ton gold, not gold equivalent gold, but look at this uptrend. And I think this is an important point again. So from 15 cents to 57 cents in a straight line, and now it's just having a little correction. So don't get upset. If you're long this stock, there's nothing to be upset about. It's sold off on the news because the news was so heavily anticipated. They announced it. They've got some warrants coming due. So there's going to be a little bit of an opportunity here probably to get this maybe a little cheaper even over the next few weeks. And I would just, you know, welcome that as a buying opportunity, quite frankly. If this dropped back to 35 cents, I'd be a buyer, you know. I think they're going to have more good results coming from the Yukon. They've got a lot of holes with multiple, you know, hits of VG, you know, across the drill core. And I think they've got multiple, you know, gold deposits, you know, on their hands there across their project package there in the Yukon. So I think Sitka is a good one, although I do not own it at the exact, you know, at this moment in time. But that could change in the future. So that's it. That's it for this week. Thanks again for tuning in. And again, if you enjoyed this video, if you like this content, please hit the like and subscribe button and feel free to share it with your friends. Have a powerful trading week.